Hello, everyone. My name is Milton. Thank you for joining CorpNet's July Live. To all of our partners out there, people watching for the first time, people watching post live, we welcome you and thank you for joining today's live. Anyone that is joining live with us today, feel free to submit your questions through the chat feature that we have here. And we're excited to kind of walk through our topic today of Nexus. So for this month's live, we decided to touch on Nexus because it's such a hot topic. We get so many questions from not only our partners, but our consumers about Nexus and physical Nexus, economic Nexus, fiscal Nexus, and what may have you. And although CorpNet knows a lot about Nexus, we thought that it would be great to actually bring a Nexus expert into the frame and talk to us and educate us on that topic. So by way of introduction, my name is Milton Tercios. I am the VP of Operations here at CorpNet, have been here for about 13 years now. Dangerous enough to know about all the different products and services and things that surround our products and services. But the one thing that I would not want to talk about and lead a conversation about here is Nexus. CorpNet itself uses experts and Nexus experts and state and local tax filing experts to help us determine what our tax obligations are, what we're supposed to be doing, where we're supposed to be registered, and what we do. And one of the individuals that I have had the pleasure of working with through that process is our special guest today. So I'd like to introduce Elisa Reyes. She is a principal at HCVT, and again, CorpNet and myself personally have worked with her for CorpNet's own Nexus questions, whether we're physical, economic, or fiscal, affiliate, and what may have you. Elisa has over 15 years of experience in state and local tax and has helped countless companies navigate their state tax filing obligations and determine where they have nexus for income, sales, and gross receipts taxes, inclusive of CorpNet. CorpNet is a client of HCBT and Elisa. So, Elisa, why don't you tell the group a little bit about yourself and then we'll get started.
Sure. Hello, it's nice to meet everyone. As Milton said, my name is Alisa Reyes. I have been working in public accounting um, in state and local tax for over 15 years. I started my career at KPMG. I was there for about 9 years, and I've been with HCVT, which is a Holt House Carlin and Ventrite, for the past 6.5 years. And throughout my career, I've helped corporations as corporations, pastor entities, individuals with their state and local tax needs. But I am very familiar with Nexus. We deal with it every day. So just wanted to, go through some general concepts and answer any questions that you guys may have.
Awesome. Yeah. So thank you. So we'll get right into the meat of it. And so, Elisa, if I were to ask you, what is Nexus? And obviously, that's such a broad term and general term, and there's so many layers to that onion of what is Nexus. How would you describe that for us and for the partners here?
Sure. So Nexus in general, it means connection. It's the connection between a business and a state. And it allows a state to compel a business to register and file tax returns in a state when sufficient minimum contacts are made between the state and the business. So I think it's important to note that Nexus can apply, the concept of Nexus can apply to income tax, sales tax, franchise tax, capital tax, and gross receipts tax. So we're going to be going through some of the specifics of Nexus, but just know that these concepts widely apply to all different types of taxes. But the application and the thresholds for which a taxpayer can be subject to tax can differ based on tax. So, conceptually, physical nexus, economic nexus does apply to all the taxes, but the specific rules on what creates a filing obligation may be different. So I think that's pretty important to note. And also, nexus is not just a state tax concept, it's also an international tax concept as well. It just defines what the activities are, like what is the business's activities in a state, and does that is that sufficient enough to create a filing obligation? So historically, the standard for Nexus has been physical presence. So we'll go through that first. So what is physical Nexus or a physical presence Nexus? This is pretty straightforward. It's the standard by which a state may enforce a filing requirement based on the business's activities physically taking place in a state. This could include if a business has an office location, a warehouse location, fixed assets, inventory in a state. If they have a physical assets in the state, then that's, creating physical presence nexus. Also, if they have people in the state, say they have an employee or an independent contractor that is doing work on behalf of the company, this will create physical presence nexus. I think when physical presence nexus gets a little bit tricky is if they don't have a continuous presence, but say you have a representative that travels to the state. While they're there, that's creating a physical presence in the state. And we get into a little bit of complication, like was their stay significant enough to create a filing obligation for the specific tax that we're talking about, or was it de minimis? Like, for example, for employment taxes, a lot of states have a rule where they have a threshold where, you could have an employee working in our state, but you don't have to register for payroll tax if it was under, say, 60 days in Hawaii, or some states might say 14 days. So it's really important to look into what the state is going to say creates a physical presence nexus, because sometimes the number of days or the amount of time is going to be defined for that. So that's physical presence nexus. Then there's a concept of economic nexus, which is sometimes more difficult to track because it's not like you physically need someone in the state to create a filing obligation. The state is going to say that there's going to be a filing requirement based on the business's economic presence in the state. And economic presence generally refers to if there are sales to businesses within the state. So if the customer is within the state and it's a significant amount, then you have an economic nexus. Now, what is a significant amount? A lot of states define a bright line or factor-based presence test for economic nexus. And this really does differ from different types of taxes. But for example, for sales tax purposes, a lot of states are going to say that if you have over $100,000 of sales to customers within a state, or 200 separate transactions to customers within a state, that's going to be enough to trigger economic nexus, and you're going to have to file for sales tax purposes. For income tax, there are less states that define a bright line threshold. Going back to sales tax, there are about 45 different states that impose a sales tax, and all of the states at this point have a bright line or factor-based presence test where they define the amount of sales that you have to surpass in order to be subject to sale or to have a sales tax filing obligation in that state. But for income tax purposes, there are about 10 states that have defined a specific bright line threshold. Like, for example, for Alabama, they're going to say that if you have over $500,000 of sales, then you have economic nexus and you have to file in the state. So definitely helpful when a state has defined the bright line threshold, because, if a state says that they have they consider economic presence significant, it's going to create a filing obligation. But if it doesn't define what that standard is, then it's a lot harder for the taxpayer to determine if their economic activity is going to surpass the thresholds to require a filing obligation. So it's definitely really helpful when the state does define that. Another type of nexus that you might run into is the concept of affiliate nexus. And this is the concept where if an out-of-state seller has a parent or affiliate with physical presence in the state, does that company, by having an affiliate in the state, have to file a return? And and there are a number of states that say that, if they have a unitary affiliate that operates within a state, then it does create a filing obligation for the company as well. This has become a little bit less, I guess, less of a problem after economic nexus blew up, because a lot of the times what would happen in the past is the company that was selling the goods didn't have physical presence in a state, but one of their affiliates did. But because economic nexus wasn't defined, they wouldn't be filing sales tax returns. But now that we have very clear factor presence, economic nexus threshold after the 2018 Wayfair Supreme Court case, I think that affiliate nexus is a little bit less of a problem, but this is generally a sales tax concept, and has to do with if you're a company in a combined or unitary group, and one of your a parent or affiliate has that presence in the state. Yeah.
Awesome. Thank you for that. A lot of great information there. I do have some questions regarding some of the state-by-state information that you were providing. Like, for example, I wrote down Hawaii 60-day rule for employees, and how some states offer you guidance and some of them don't, right? And leave it up to interpretation. Can you provide a little more information, or kind of some state-by-state examples that you can throw out to the group as far as like Nexus is concerned, whether it be fiscal, economic, or affiliate?
Yeah, sure. I think that there are definitely, while the concept of nexus, it being a connection with the state, seems simple, the way that it is defined and the way that it is implemented can be a little complicated. I think a good example of some state-specific rules when it comes to nexus is how the economic nexus threshold can differ based on the type of tax it is. Like, you know, for Colorado, for example, for income tax purposes, to establish nexus, you need $500,000 worth of sales to Colorado. But for sales tax purposes, you only need 100,000. So I think that that's really interesting. Another interesting thing is that, some states are going to establish a threshold for even property and payroll. Like, California is going to say that if you have over $71,000 of payroll into a state, then that's going to be nexus. But if you have less, then even if you have a physical presence, you don't have a filing obligation, because it's below that $71,000 threshold. And just as a side note, for California, the threshold changes every year with inflation. It actually started with 50,000 way back in like 2018. It used to be like a $50,000 threshold, but now in 2023, I guess the year that we're worried about, it's like $71,000. So definitely year after year, take a look at that threshold to see how much it goes up, because as the thresholds go up, it's a lot easier to, I guess, be subject to tax and create nexus in the state.
Gotcha.
Yeah.
No, thank you for that. And that kind of segues into the next question that I had, and I had written down, which was, you mentioned, hey, some states provide guidance on whether it be due dates, guidance on whether you meet a threshold or not, to be liable for a tax or not. And so where would you point someone to say, hey, if you wanted to get these specific rules and nexus rules with the states, do the different government body and agencies have listings, graphs? Where do you find all this information?
Sure. I think that for state-specific information, the best place to look is the state website. And they might have a publication specifically about doing business and creating nexus. But another really good place to look is the form instructions. Like, if you look at the income tax return instructions for the state, usually the first thing that they cover is who is subject to this tax. And in that section, they're going to clearly state exactly what standards they use, what thresholds you have to meet to create a filing obligation in the state. Now, if you want to have like a broad, like I want a chart of the sales tax thresholds for all of the states. In that situation, I think the Sales Tax Institute has a really, really good chart on the thresholds, the effective dates of the thresholds, like any detail about like exceptions and stuff like that. So that's definitely a good place to look. And if it gets a little bit more complicated, like say that the business that you're dealing with isn't really a standard selling TPP business, or we're dealing with services and tangibles and it gets a little complicated, I would definitely suggest that you reach out to a tax professional. Like the whole HCVT also assists a lot of different clients trying to navigate their nexus and filing obligation situation. And for people like me, it's what we do every day. So sometimes if you just look on the website by yourself, you might miss some really big key exceptions or key rules that you might like run into. So I would definitely, if it gets a little more complicated, I would definitely reach out to a professional on that.
Yeah, awesome. No, that's a great call out. I know that when we were going through our process, we actually started building out a guide to Nexus, right, that we have on our website and a blog post that we put up. And it's a state by state thing. So to all of our listeners and viewers, there is and I'm just going to read it out loud and we'll provide it later, but it's corpnet.com/blog/state-guide-economic-nexus. That was really long. We'll post the link, but there's a guide there. But keeping it fresh and new, to your point, Elisa, is hey, if California goes up with inflation, that has to, whoever has publicized these mass guides has to make sure that they're on top of updating these things as they go. So a great call out of, hey, being in tune with the latest publication from the state and its government agency, but also speaking to a professional that does it every single day, right? Like it's over at HCVT and Elisa. Okay, I do have some other questions here for you. What is Public Law 86-272, and how does that affect state income tax filing requirements, particularly for businesses that sell tangible personal property?
So Public Law 86-72 is a federal law, and it prevents a state from imposing an income tax on businesses if their only activities is sales solicitation. So this is a really, really favorable law for companies that sell tangible property and they have maybe sales representatives that go around certain regions to make sales. Generally, if a sales representative is going to enter the state to make sales, that's a physical presence, right? You have someone in the state, either an employee in the state or someone traveling significantly into a state. That would create nexus because it's physical presence. However, this is an exception for just income tax, right? For just companies that sell tangible property. But if you meet those criteria and your only physical presence in the state is sales solicitation, then you do not have a state filing obligation. And this is federal law, so it trumps any state economic nexus threshold they might publish or anything like that. So I think that for this Public Law 86-72, the important thing to note is that the Multi-State Tax Commission, the MTC, has published guidance on, it's a very long and in like pretty inclusive list of activities that are protected under Public Law 86-72 and activities that are not protected. Like, for example, if you have a salesperson that is also approving orders within the state, then that's not going to be protected. But if they're making the sale and they're selling and they're sending the orders back to headquarters for approval, then that's okay. They can be going around, like looking at displays and stuff. But if they're making replacements or repairs, then that's not going to apply. So it gets a little bit specific. But But I definitely think it's a law that sellers of tangible personal property should be aware of, and it could really save you from filing in a lot of different types of a lot of different states for income tax purposes.
Gotcha. No, that makes sense. And it adds an extra layer of, hey, now you're not only paying attention to the specific state laws and their publications, but also checking on to see if there is anything at the federal level that either conflicts overrides, right, the state or county laws and things that you're working under. So no, thank you for that. And before we open it up and go into like the questions that are out in the stratosphere here, is any other general tips that you would give someone who's generally confused on Nexus and is looking for direction?
I think that generally what you should look at is where do you have people, right? So I think that you should look at where, like, physical presence is the easiest one to look at. So, where do you have your inventory? Where do you have people? Are you filing, sales tax, like income tax returns in those states? If not, why not? I think that's a really good place to start. I think that if you are kind of confused about if you have filing obligations in different states, I would definitely reach out to a tax professional, and they would probably be able to do some kind of nexus analysis on behalf of the company and really help you determine for not just income tax and sales tax, but gross receipts tax and other different types of taxes on where you need to be filing, and the forms that you need to be filing, and the frequency in which you need to be filing, and all this different kind of stuff, because those penalties on missing filings and stuff, it could be really, really big. So you definitely want to be on top of all of your filings, and a state tax professional would know what to do with that. So
yeah, awesome.
That would be my biggest advice.
Yeah, thank you for that. I know we've taken that up. We've actually gone through and reached out to HCBT, you individually, and gone through all the state by state where we have employees, our biggest customers, and down the line of it, finding out what thresholds we're meeting for liability and things like that. So definitely a great call out. Now we're going to move on to the questions from the live viewers. And so one of the things that I always like to preemptively just say to our listeners or our viewers is CorpNet is not a law firm. We can't give legal, tax, individual case-by-case advice, especially through, not only do we not do that, but in a webinar format. Although Elisa is an expert, but she's speaking through the CorpNet platform, we won't be able to give like individual one-by-one case scenario answers to some questions or to some specific questions, but we will tackle it from a general sphere, right? So we might take in your question, and although we can't answer it directly because it might be like a use case that you might have that we're presenting and could be seen as giving advice, we'll try to answer it in the most general way possible. And then if there is more distinct things that you may want to ask Elise outside of this, again, you can look her up, you can find her on LinkedIn, and HCBT is the name of the firm. Right. So let's go to the questions that I see up here. So here's one from Kayla. I hope I said your name right. Thank you for joining us, and thank you for your question. Should a business collect sales taxes even if they do not have a filing requirement yet? So I guess the way that I hear this question is, hey, even if a state has a threshold, say you have to meet $10,000 in sales before you're liable for sales tax, do they collect before they hit that point, or is it until after? And can you answer that, I guess?
Sure. So you can, but just so you know, if you collect sales tax, that money doesn't belong to you, right? You have to remit it to the state. So you are pretty much, if you collect the sales tax, you have to remit it to the state. So then you're kind of making yourself a filing obligation. So I think that generally what companies choose to do is they watch out for, when you're getting close to the threshold. And, once you get there, I think that they start collecting and filing during that time, just so that they don't preemptively start to collect and remit. Because if you collect it, you have to remit it. Like, you don't get penalized. Like, you can collect and remit even if you're under the threshold. But I do think that most companies will probably just track to make sure that they're right at the threshold before they start to collect for that reason.
Got it. No, that makes a lot of sense. Thank you for that. Yeah, and you're right, because if we start collecting, you owe it, right? And so therefore, you've brought down the threshold from $10,000 to my very first dollar, and now I have to and pay that out, sort of thing. Okay. I have another question from Deborah. Thank you for joining us and thank you for your question, which is, and this might be for me, and then if you have any resources that you can point to, Elisa,
Sure.
Feel free. But do you have any chart filing requirements for income tax returns? I know that we have a guide for Nexus, as I shouted out earlier. We'll have to take a look at that to see if it has specific dates for those requirements. I know it has state by state information in there. But if we do not, Deborah, I will talk to our teams that work on putting together resources for our partners and our clients, and we'll get that out to you. But again, a good first start, at least for CorpNet side, is our economic nexus guide that we have. And then, Elise, I don't know if you have any pointers as to whether they have information like that.
Sure. So for us, we have access to different tax research platforms like CCH, Answer Connect, BNA, and also Checkpoint. And those platforms all have income tax filing thresholds. So if you have access to any of those platforms, you can easily pull a state-by-state chart that will have those thresholds. Like HCVT, we don't specifically create one ourselves, but those tax research platforms have it. And I'm sure there are places in like Google that have it, but because we have access to those platforms, that's what we use.
Awesome. No, that's great. And that's a great call out, because a lot of our users and our viewers here are CPAs themselves, they're accountants as well. Right. So leveraging the tools that other folks are using might be a good shout out. And so we will also try to post some of the resources that Elisa has mentioned onto where we post this video of like, hey, here's some resources and things that they use to try to determine that for their clientele as well. So thank you for that. Another question from Deborah. Thank you, Deborah. Additionally, if you have employees working remotely in a state, not doing sales, simply providing services to the company, does that create an income tax return filing requirement? And again, also, is there a chart? And I'm assuming you're going to point them to the same direction for all those rules. But yeah, how can you answer that generally for us?
Right. So generally, if you have employees that are working within a state that does, that is physical presence in a state, and that will create an income tax filing obligation. There are some exceptions here and there, but that one is pretty straightforward. If you have a property or employees within a state, it's going to create an income tax filing obligation. Now, if it's very, very minimal and it's one of the 6 states that have a payroll and property factor presence threshold, there is a slight possibility it might, but those thresholds are generally like maybe 50,000 of payroll, 70,000 of payroll, and you would generally probably surpass that. So if you have any questions about state specific on that, you could feel free to send me an email or reach out to Milton. But I do think that generally, if an employee is providing services within a state, that does create an income tax filing obligation.
Gotcha.
For the company.
Great. Thank you for that. Another one popped in here. Let's see. Marissa Bardo, is there a way to contact Elisa Reyes? She says, assume she's asking this. Well, okay. Oh, I see. It's an internal question. Yeah. Is there a way to reach out to you? How can folks?
Sure. So my email address is elisa.reyes. I don't know if you can see the spelling of my name. Maybe you could also post it with the description, but it's just elisa.reyes@hcvt.com. So you could just shoot me an email and I'll try to respond as soon as I can. Yeah.
Awesome. Yeah. And then again, we'll try to post Elisa's information as well. But I also, if you just search her name on LinkedIn, if you have LinkedIn, you'll be able to pull her up as well. I looked her up earlier in the week and she popped right up as the first one. So you'll be able to find her there or via elisa.reyes@hcvt.com. Was that correct?
Perfect. Yep.
All right. Awesome. And we'll try to post that as well. All right. Thank you guys for interacting with us and sending over your questions. A huge thank you to Elisa for covering this topic for us. I learned a lot within this half hour. So every time I meet with you, I learn more and more about Nexus. So thank you. And thank you everyone for tuning in. If there are any topics that you all want us to cover, whether it be CorpNet based or something related to our services, and we might bring an expert like Elisa on to cover those topics, feel free to share that with us. You can communicate with us all different sort of platforms, whether it be there on LinkedIn, on Facebook, where you're viewing. You can even send us an email to info@corpnet.com. My email is milton@corpnet.com. So just my first name, milton@corpnet.com. So feel free to reach out and throw out suggestions of topics for us to cover. A reminder that you can also post questions as you're watching this. So if you did not watch live and you're watching this once we go live with the posting on LinkedIn or Facebook, you can also ask questions there, and someone from our team will reach out or interact with you within that social platform. Last reminder, our next Facebook Live event is going to be Wednesday, September 11th at 11 a.m. Pacific time. And our team is going to be sharing some insights on the many types of LLCs. So I'm assuming member managed versus manager managed versus series LLCs versus professional LLCs, and the entire gamut. So stay tuned for more info on that and who will be presenting that. Once again, huge thank you to Elisa, and thank you all for viewing. Until next time, see ya. Bye,
Thank
guys.
you.